everybody. I'd like to welcome our next panel. The topic is the endgame for crypto policy, control, convergence, or fragmentation. Moderating today will be Charlie. Thanks for joining us. Then we have Philipp, James, and Sam that's joining the panel. Okay, over to you.
Hello. Hi, well, brilliant to have everyone here and some fantastic panelists who've just been introduced. So, yeah, what are we talking about here? The end game of crypto policy, convergence, control, or fragmentation. I think very briefly before we dive in and hear from our fantastic panelists, let's just try and define that, right? So, like, what is an end game? You know, an end game actually comes from chess in the 1880s, right? Literally, and it's what decisions people make within that game scenario when there aren't many pieces on the board. So what we're talking about here is, as the situation we're in now progresses, what regulatory decisions are the key players, governments, private companies, and consumers like yourselves and many people at this conference going to do in that scenario? So I guess to set the scene, let's bring in you, James. Can you maybe just give us an overview of the key regulatory environments, UK, US under the Genius Act, and maybe some of the low jurisdictions as well?
Yeah, sure. So, everyone. So what we've got at the moment is a global shift. Traditionally, you've had your beloved pirate nations. This is the BVI, this is the Cayman, this is the low regulation, low tax jurisdictions. And you've had the jurisdictions we all hate but need. This is the US, the UK, the EU, where all the money is for these different institutions. The shift traditionally has been set up abroad and then find a way into these jurisdictions. And what's happening at the moment is these gangplanks into these major jurisdictions are becoming harder and more expensive to come into. So you've got MiCA in the EU, where the Europeans have taken the approach of regulate, then innovate, which has led to a sort of desert-barreled wasteland when it comes to true innovation, but solid way forwards. And if you want to go down, spend lots of money, you can do that. There's the odd cheat, like fronting in Germany, where you can basically borrow other people's licenses to get access to the EU, so there are cheats in the system. But it's about taking whatever innovation you've got offshore, making it look like something slightly more old-fashioned, because let's face it, we have copied and pasted MiFID, which was the old legislation across for this, and that's in the EU. You've got the US, which is anarchic, so you've got old Biden rules, led by regulators with no money and no appetite to do much, with Trump running around announcing we are now going to be pro-crypto with something called the Genius Act, which is not comprehensive regulation of crypto. It is not fully implemented, and the ballpark cost of getting crypto licenses across the US is still around $3 million US, 1.5 for New York, because let's go for it, and then the rest for 1.5, so still very expensive. And then you've got the UK in the middle having a midlife crisis, because whereas Trump wants to go for innovate than regulate, and Europeans want to go for regulate than innovate, the UK is going, at the moment, traditionally more European style, but looking more and more at the US and go that way, and hasn't quite got the chutzpah to go for Pirates of the Caribbean Cayman approach for its own right. So effectively, the UK is now doing the UK approach of write a nasty letter, other side, ooh, and then we basically compromise and find a way forwards. And we're seeing that particularly in the scope of the marketing rules coming out, where basically the FCA has decided that it has jurisdiction over the entirety of the English language, and therefore writes stroppy letters to people threatening them with 2-year custodial sentences and unlimited fines. But if you navigate it right, and there's now tools like RuleSpark which do this, will let you come out of that to basically find a way forwards effectively. So we're getting that change. The last thing to be aware of is the joyousness of tax, where HMRC have decided starting next year it quite likes money, and therefore has decided to make it harder to come outside the UK to not pay any more tax anymore, which again is pushing people towards those big institutions. So what you're moving from then, very high level, is go from Pirates of the Caribbean and then find a cheap way in, to now those entry points getting more expensive, more aggressive, and more of a need for substance and playing with local rules. So the days of, let's do an ICO and go to the world are dying. We're now into select regions, select markets, and crypto is probably like the dumbest child in the room when it comes to complying with regulation, so they can keep hammering and hammering. Lastly, just to mention UAE, there's been 18 different enforcement actions taken in the UAE last couple of weeks. Therefore, the idea that there is no law in the UAE, which we love to preach, doesn't actually work, and therefore that's going to get harder.
Brilliant. Thanks very much, James.
How do I follow that?
Yeah, but just as a framing, can you maybe try and nudge in a bit of a sort of definition here of convergence and fragmentation, if you're able to.
Okay, I should provide some context. These are experts. I have experience. They have experience as well. I just have experience. So I'm in the physical real-world asset tokenization space, but also creating scalable investment products. So we made a decision 3 years ago. We weren't going to skirt around regulation like the majority of the industry has done. We were going to tackle it head on with the hope that guidance notes would be written really based around our product design, which is what we've ended up having done. We started the journey in Singapore, where I used to be based, and we had this kind of experience. You speak with Monetary Authority of Singapore, MAS, and they say, we're forward-thinking, we're dynamic, we want to be the first people to tokenize this kind of project. You spend a lot of money with lawyers to get to the point where they say, we love everything apart from that very, very crucial detail. We can't give that the go-ahead. 10 minutes later, you have coffee with them outside the office, outside of billable hours, and they say, if you get that signed off in any other jurisdiction, come back to us and we're good to go. Okay, we'll do that. We go to Dubai. Again, publicly, you think, VARA, great. You can sit down with VARA and actually have a two-way discussion, which is quite refreshing with regulators. You tell them what you need, and they will try to find a way to make it work. It's also only been around for 2, maybe 3 years now, so it is quite a cleansed framework, but it's still a framework that's based on the FCA. That's still the basis of their structure. The concern with VARA is, as you point out, it's very flexible and it's very free in many ways, but it can change as the wind changes direction. In a year's time, you might find that you've lost all support and you're up shit creek. And we were partly concerned with that, but ultimately they said the same thing as Singapore. Come back once you've got this somewhere else. Surprisingly, after we did the rounds of Malta, Gibraltar, Cayman Islands, BVI, all of which would have provided a solution to us, we weren't comfortable that they were credible enough, let's say. We want to be able to talk to institutional investors. We want to speak to private banks who introduce us to their customers, and they know their reputation is at stake. If our solution is in Gibraltar or Cayman, there's sometimes questions over it. Not saying that every structure in these jurisdictions is bad, of course. Surprisingly, we found a solution in Jersey under the Jersey Financial Services Commission, which has slightly lost its stature as this offshore financial hub over the last 10, 15, 20 years. It's lost out to the likes of Singapore and Dubai. But they seem to be taking a really strong step towards saying, okay, we're back. We want to be leading in the RWA tokenization space. Let's make a bit of noise. So we ended up getting our solution there between Jersey, but we had it written with a law firm in London as well to ensure that we were at least FCA forward compliant and MiCA forward compliant if we chose to go for full regulation in either of those jurisdictions. So my experience is very fragmented. Surprisingly, everyone that you thought would be like a shoe-in is maybe not the same shoe-in, either through the cost that they're starting to put in place, or because they're not actually what they promise they are once you get into the meat of it. I think there's a possibility of convergence. I don't think it's anytime frustratingly soon. In the last 6 months, FCA is unbelievably hard to deal with. 3 times in the last 6 months, I've had a senior member of the FCA say, either on stage or at a panel or a meeting, oh, we really want to hear from the operators. We want to hear, how do we build this for you? We're not experts in the field. Tell us what you want. Oh, but to do it, here's our, call for commentary on our 50,000 word document. You've got to understand that first and then submit through this channel. We're entrepreneurs, we're innovators. I haven't got time, I haven't got a spare week to read and understand that document to submit it through that channel. So unfortunately, I don't get my say. They also say, speak to us directly. Here's my email address. Contact me on LinkedIn. I've done that. They don't reply. So there's such a chasm between the regulators and the consumers, which is obviously the end game is to close that. I don't know what the path is at the moment. That's unclear.
I mean, just about that, Singapore is the place good people go to die. As far as I am concerned, don't touch it. FCA is internally retraining. It thinks the world is there to train the FCA. It will do you no favors in return. It might stick you in the sandbox, which you may or may not ever escape from.
Which is very expensive as well.
Oh, yeah. Burn money. The quickest, cheapest route is currently Europe. You should look at that.
Well, Philipp, can I rope you in here? Philipp, as the managing director of a GmbH. I won't try and say that in German, but that's the sort of German, Austrian regulatory environment. But global VP of governance. And Bitpanda is one of the leading Austrian MiCA-regulated companies. And MiCA kind of sets the bar as a kind of high standard in regulation. And going from a regulatory environment like MiCA into potentially lower jurisdictional environments, when you talk about that, whether or not you see convergence there in terms of, like with cars, setting a higher regulatory standard in the EU, other companies are going to basically try and meet those higher standards anyway so they can sell into that large market.
So first of all, I would like to reply a little bit on to see what's happening between fragmentation, convergence. So we're going to see more and more fragmentation before it gets better. And the reason for that is that currently we have all these national agencies, be it an FCA, an FMA in Austria, VARA, and many others around the world, are gonna trying to figure it out by themselves what's the best. And usually you have there, as you have in many of these discussions, those who are understanding in favor and those who are, let's say, more behind. And I believe those guys with FCA will say, please, let's do something, but they also hold back by policies by themselves. And that's kind of the fight in there. But, and I want to kind of put in a little bit emphasizing that all the big global setters like the BIS, like the Financial Stability Board, like the OECD, they are all discussing this now. So suddenly they do have finding a way to get there. But we should not forget that's like institutions that think in decades and not years. So they are slow to get somewhere, but the Financial Stability Board will bring out a report on the topic. The BIS is really highly discussing it. So what's happening in there is a slower stick where they then will influence what all the other regulators do, because we sometimes think, okay, our regulation is happening on the financial sector from our FCA or national bank, but realistically they are doing what they internationally agreed upon with certain degrees of changes. And this is what's currently happening. And now coming to MiCA and what's happening there. MiCA has a very high standard, but we also need to see that regulation had different layers of standards. There's a couple of layers that are very naturally, like governance rules, and they are not new rules. I mean, these rules are like 3 lines of defense. They exist since decades. Yeah? But what's the more difficult part, and that's going to be internationally pretty much the same. But what's more interesting is the product rules, and that's what comes you very much into. You want to kind of innovate in a product. You don't want to kind of go in and discuss details on that with people who barely have an understanding of what you're doing. And this is where it gets difficult, because we can work with international products. We have the largest offerings, now in UK too. But the difficulty is then finding the way to make it work in each jurisdiction. Coming from MiCA, that helps, it's a large thing, but it doesn't guarantee that not UK has a different drive on it, and everybody has a little different drive. So first, and I fully agree with there on the product side, we need to find an international place to make it work as a product, and then we can think how we squeeze it in regulation, because that's like the second point to make it work somewhere. The most important is to have it working at a practical level.
And just to briefly just dive in on one point there, do you think you'll see other companies following suit, like Bitpanda's done, in achieving that MiCA regulatory standard? Otherwise, they might be excluded from the European market. Do you think, you can't speak on behalf of other exchanges, but do you see that happening?
So I think the EU has one major problem, and they are right now working on that. That's the execution and the enforcement of its rules. So we have a quite good set of rules, but we have a very difficulty in enforcing them against global firms, because in the financial sector they were never had that kind of problem. They always said, when I want to go to somebody, I go over the street to the next Deutsche Bank building or something, and when I want something, I go to the
dodgy bank.
Sorry?
No, it's just joking.
Yeah, but now they need to kind of find firms, and it's more difficult for them. So that's the one thing on the enforcement level, on making everybody agree with that. On the other thing, the MiCA rules are a great standard on a company cusp side, but they're very, very bad on the product side. So we're not gonna say, okay, just because Mika is gonna tell us that way, that's gonna be our global standard. That's not going to work because Genius Act does it differently. And as I said, first we need a product that works for consumers, and then we need the way and alignment to do it correctly.
So just to summarize, it's not like a car. You know, you're going to have a different car for each regulatory zone in that context. I'll let you guys jump in, James.
I've been involved around about 3% of the global regulatory frameworks in crypto, including Kazakhstan, Mauritius, first ones in Africa. All of them start off by looking at MiCA. All of them start off by looking at what's going on in the UK. That's why, as a UK lawyer, I've been yanked in to look at these sorts of things and help draft it. So there is a certain amount of overlap overall, but bear in mind, because of the nature of Web3 being so global, the regulators for the first time are on this kind of beauty parade where they feel that there is an element of which one you go for. So as a result, all these regulators want to attract business. Now, we all talk about being crypto hubs, and everyone in crypto thinks, oh, that means no regulation. Actually, regulators are policemen. So they tend to whack you on the head if you don't comply to get you in, rather than say, do whatever you like. So in the UK, for example, the way the FCA has publicly stated on social media, because modern, is it will put out public statements that you're in breach of the UK rules. That's a criminal offence. That means your banking providers are now money laundering because they're holding the proceeds of crime. FCA doesn't need to do anything. You just pass out a public statement and you will come to it because you've got no banking partners anymore. SEC, better funded, they tend to sort of find you and lock you up American style, if you see what I mean. And I think your point, it'll be interesting to see how the European regulators seek to enforce their rules, because at the moment, it's still grey. They've got the UK blueprint, they've got the US blueprint, they can do whatever they like. I mean, one of the things that's quite interesting is regulators, you know, they have a sense of they want to be their own thing. So there is a certain bit here of, I want to be different because I think it's better and I want to be a better regulator going in the room. And that ego moment doesn't always help, effectively, but it gives you choice, and for different projects, sometimes that's useful.
How much, this is really a question for you two, how much do you think is the UK government's appetite for risk holding us back? Because you go to the Gulf. I was in Bahrain a couple of weeks ago, and on our first afternoon, we sit down, we don't get out of our chair, and within 4 hours, we have the Economic Development Board, we have the Central Bank, we have their FinTech Bay, we have 5 other regulatory associations come speak to us, and they say, come set up here, you'll get regulated with us, we'll bank you, we'll give you subsidies for your employee salaries, we'll do this. Because they're willing to, oh, and by the way, obviously they don't charge any tax for corporates or for individuals. And they're there taking a risk because they know that opening the doors to anyone and everyone, you're gonna have some bad actors come in. But they're prepared to do that to get ahead. We obviously don't have that. We've been around for so long. We are British. We are inherently relatively risk averse. How do we find that tension? Or we're British at least. How do we find that tension between the innovation and the risk and the guidelines that kind of protect it but allow it?
It's like and I have some years of experience working with regulators, like said 20. And the interesting thing is that, first of all, they're all humans, and they're all having different opinions. So when you go to one institution, there might be 20, 50 different opinions running around. What I do see in the UK, and so it's quite positive, is there is a general overdrive in saying we want to do and have more. We understand that UK is in some places in a difficult spot, and we believe crypto can help us out. But that doesn't mean that everybody has that opinion. And what it also doesn't mean that everybody who is setting standards has the same viewpoint, or what we still have, and that comes from the regulatory world, a very much fear-based viewpoint. So they don't go ahead and say what this innovation can do. They're going to declinate on what are the risks associated with that. And this is where a lot of the things in the UK, I think, come from the discussion. That's why it's so exciting to be here in the moment, is because you're right now figuring out that line between how much risks I'm ready to take to make it more business friendly. While I do think you're not the fastest anymore, I think you have a good chance of getting it more right than the EU. But, and I think if you do have it a little bit more in line with EU, you could be having a larger footprint than the US. from the perspective that the US tends a little bit to kind of go overboard, and they have their own problems in itself.
I mean, I'm going to be, yeah, I mean, I totally agree. I think the other thing, though, is don't underestimate the level of apathy in the room from a lot of the major parties at the moment. Farage has decided not to be apathetic. That's why he's here. He's discovered that crypto is the most likely to switch political allegiance because it's pure pro-crypto as a leader. Trump discovered it, gave a rally, quite a whole lot of votes. Farage is doing the same kind of thing at the moment. The big two parties, MPs, anyone's guess. Some are for, some are against. As you say, it's muddled. And an overwhelming apathy because they're more worried about other things all the time. I'm actually cautiously optimistic for all the wrong reasons. I think UK is going to be the least bad option in the room. It's going to be where we're going. Not particularly pro, not
Isn't that just so British?
But, you know, less rules than the Europeans, a little bit more flexibility in there, less expensive than the Americans, not particularly awesome, but, you know, all right. That's the English approach.
As I want to move on to audience questions, I know Tim had one. I don't know if we give you a microphone. Once they're giving you one. Maybe introduce yourself. You're running one of the leading Web3 marketing agencies in the world, so I'm interested.
Yeah, no, I was a little bit curious to see how the overall crypto marketing policies are moving in the UK, because you are starting to see not targeted at the UK, and everybody's kind of like trying to stay clear of it and move away from it. So where do you think that the UK crypto marketing policies are going, and in what direction do we see them heading, basically?
If I can frame it with some experience again, and then you guys come in with the expertise. So we can only sell to eligible investors. So professional investors, self-accredited, self-certified. It cannot be retail. But the perverse thing is this is kind of a definition that's been established decades ago and hasn't really adapted to this incredibly innovative technology that's driven by the next generation. My oldest nephew's 23 years old. He's been investing in and trading crypto since he was 19. He put himself through university on his profits. He bought his first car on his profits. He and his friends have never owned traditional equities. This is what they understand. But they don't classify as eligible investors because they don't have a salary of 100,000. They don't have net assets of 500,000. Someone who is 50 years old and has absolutely no idea what a wallet address is, but they don't understand the technology. So I think it's wrong that we're still going with these existing definitions. You can market to here, you can market to there. They're a lot smarter, they being the next generation who currently we can't market to, a lot smarter than probably most of us when it comes to this. I think something needs to change. I don't know what it is. You guys got the solution, hopefully.
I think it's quite easy. So we need to create a level playing field. As soon as we have the new rules that define a licensing process, there shouldn't be any difference to other products like stocks and so on. And then that's one of the things that we have here now is that the FCA created the things they were able to create, and created in a sense of stay away of it rule set. And what we hope when we now have them more integrated in the financial sector, that, and we are pushing for it, that this is then a more level playing field to the rest of the normal assets and not the super high risk, stay away with whatever you do risk assets.
The current position is completely insane. It's basically goodbye Google. You put on Google not for UK retail, everyone downloads a VPN, they invest anyway, we all pretend they don't. What you've got at the moment is money is relative. And what I mean by that is you're entering into a world where you either go down the Pirates of the Caribbean approach, that may or may not last. Regulators have a certain level of finance, they're going to go after the biggest sinners, they will deal with the biggest sinners, they'll move on to the next lot, then the next lot, then the next lot. That's how regulators behave. Hence, Pirates of the Caribbean approach, short term might well work, long term, it's a risky occupation. But the thing you got at the moment is when people started off, what you got is you ask the securities regulator what they should do, and they go, let's apply securities regulation, copy, paste. The rules on marketing are taken straight out of hedge funds and all these equities. And everyone talks about securities, even if it's something like a video game. And the last time I played a video game, I was not thinking stocks and shares ISA. I was thinking get the dragon or whatever it is you do during those sorts of things, if you see what I mean. So it's not necessarily fit for purpose. one of the biggest whinges I have at the moment is on the relativity of money. And what I mean by that is more and more people come into the market, able to give you the sign-offs and come in through legitimate means. That will bring the cost of entry to markets down. Market forces at work. You've also got this sort of vague obsession in crypto that you give 50 quid to 3,000 firms and you become a billionaire because, you know, just pray and pray. That has never really worked in more traditional businesses. So you're going to be a bit where you need to have bigger war chests, and when you got a bigger war chest, these costs effectively come down, because £50,000 is a lot when your entire budget is 50 grand, and nothing if your budget's 10 billion. So money is relative, and the things are going to change in that sense.
Thank you. We've just got a couple of minutes left, so I just want to move to closing remarks. Philipp, if you want to provide yours, and then Sam.
At the end of the day, we are now in a wild situation, in a chaos situation, if I want to say so, and that's a good situation because we can create. And that's, I think, everybody needs to go in, and that's the marketing rules, that the rules for products. We need to push those regulators. We need to push them more and more to see and understand that what we are creating now has a global footprint. And for the UK specifically, I do believe, and we need to have it globally syncing, because if we lose these products, lose this innovation, it's not going to go away. It's going to be somewhere else, and you're not going to have one part of the cake. And we are hopefully that we can create this in UK.
And just to press you, convergence or fragmentation, if you had to pick one, which way do you see it going?
Fragmentation first, convergence later, and control comes last.
Sam, same question.
What would I like to see? Or
Well, say what you'd like to see, and then maybe what you see happening.
I'd like to see more support for innovators. There's 99 to 1 who skirt around regulation and policy for as long as possible, and that's where most of the bad players come, and they kind of spoil it for the rest of us. But you get penalized for trying to do it the right way. And you mentioned the British the FCA sandbox. It costs 10 grand to sign up for. You pay a lot of legal fees, probably 50 grand's worth of legal fees to continue it, and then ultimately you're priced out of actually getting anything done. I'm hoping, that the US and UK joint sandbox produces something. We've got another 160-ish days to find out.
And convergence and fragmentation, one line, and then James, you've got 30 seconds. James, close it.
I'm going to have fun. That causes everyone else to cry. We're going to get fragmentation. That's going to be the way it is. Money can be made in fragmentation, and then I think in long term, possibly more and more convergence. But do not underestimate the joy of fragmentation, the ability to make money in a fragmented world.
Brilliant. It's been a fantastic panel. Thanks very much to everyone. And thanks to everyone listening in here and online.